Check, check, check. Mic check. Testing. 1, a 2, a 3. All right, all right, all right. Good evening, everyone. We are back and had a pretty excellent day. Hopefully, everyone had a good day as well. And let's go ahead and get into a couple of things today. So, as you all know, my mentor ICT Inner Circle Trader, aka Michael Huddleston, one of my mentors, one of my most impactful mentors, um, had his last live stream today, and I'm actually going to be studying that after today's market review. But that's it's really amazing to see what he has taught me over the past year of study. I can't say it's been easy. It's been a lot of grueling study time, frustration, failed accounts, and whatnot. But today's live action was a testament to some of the skills that I've been fortunate enough to gain. And so let's go into market review for today. We're going to go through a couple of trades. We're going to go through what I anticipate for the coming day, week, and we'll go from there. So let's head over to the charts. Okay, so tomorrow, Tuesday, we have 8:30 a.m. employment cost index, followed by some stuff during the morning here, and then at 10 o'clock, CB consumer confidence. So Monday, Tuesday of a non-farm payroll week is going to be quite interesting. And there's also, I think, FOMC statements on Wednesday too. So it's just going to be all around really goofy week. Lots, and you can get really hurt. You can really hurt on these days, on Thursday and Friday, because of how swiftly price can move against you. So I'm going to record it all. So just watch it if you haven't been used to trading it. And we can go from there. So let's take a look at the charts. So let's go through a couple of we'll go through some of the trades from today. And then, yeah, I think let's go through some trades today. I'll have to bring over another screen in order to do so. So, but we'll keep the daily on there for now. But I want to talk through a couple of trades that were beneficial today that everyone saw live. All right, so the first one handles, and what's important about these trades is I'm showing the parts where I also got it wrong. So here, this is a 5-second chart. You can see where my executions were. This is an Apex account, so it's a regular evaluation account. It's as if you got one of the accounts, went to my YouTube about page, clicked on my link, and then used my code to get 90% off your starter accounts. This is the account that we are looking at here. So I bought one this morning, and I wanted to take a look and see what was happening throughout the day. On the daily, I could tell that we were we were on a draw up to this volume imbalance on the daily, and I mentioned that during pre-market prep yesterday. I mentioned it during this morning prep. So lots of times when I was predicting that one. So you can go back and check that out for yourself if you are interested. But you can kind of see here where I was testing the market. Hey, like, do we go lower? All right, let me stop out here for a couple, like $100, and then I'm gonna try going long here again. I get stopped out here basically, long again, get stopped out there pretty quickly, and it goes against me into this old hourly fair value gap. So we see here that the like 9 o'clock, 9:10 ish low, we see the Judas swing takes out this initial high and this initial low, and we end up really skyrocketing back upwards, right? So this is akin to my strategy for passing Apex evaluation accounts. I don't know how long they'll let you do this for, but I will do it as long as they will let me, as long as I need to. Now, keep in mind, I only, out of the 20 accounts that I have, I blew 3 of them. So I have 20 total accounts again after these next 3 come back. So you're only allowed to have 20 total accounts per household anyways, so no big deal there. So what did I see here? So on the 5-second chart, and if you don't have this on TradingView, you know, you might not need it. I mean, you can go to a 1-second chart. You're not going to see as many plays as I see, but I still use the 1-second chart as well, and I have that up there. And there is definitely plays to be done on the 1-second chart as well. I just happened to get in a little bit earlier than you. So still plays to be had, and that's okay. So what do we see here? We see a sell side imbalance here. It does not get traded to. So you don't get a chance to trade back into this fair value gap for the 2022 model at open, right? You don't see this Judas swing. You head back down to a key level. But we do see that we see some breakaway gaps here that don't get traded to, right? Bullish order block, it does not get traded to. Fair value gap down here. We see a high, lower low, higher high. So we're treating that as a bullish breaker. By the time we see price come back down to it, we expect it to rise. That's kind of what I was looking for. And as well, I was thinking that this would be used as an inversion fair value gap if we traded up and above it. So I was thinking that this would go up and above, which it does for a moment. Gives me a little bit of a scare, but I also recognize that this bullish breaker is down here, and I take that and take that for about a little over 15.5 handles, which at the end of the day is all I needed for that particular account. Right now it's showing 10.22 because I took a quick market buy, market sell to register the next day's trading day. So you need 7 trading days to pass an Apex evaluation. So at this point, I have plenty there. I'm not going to lose a lot of money. So I will just take a trade here and there, focus on the PA accounts. So this was one of the better trades. We see this mini market maker model here. And we see that we were able to aim for some of the upside objectives here. We didn't keep it very long because we don't need to. On evaluation accounts, your trailing stop loss trails you no matter what value you go up to. It trails you minus 2,500. It doesn't stop at 50,100 like the performance accounts do. So that was one of the trades that was pretty good. I think the next one, I believe, was on this account. Let's see. Here we go. So this was a long, and I was expecting to see this trade up to the top of this volume imbalance. Now keep in mind, you can kind of see a few of these where I get stopped out here just because I'm entering on really stupid entries. I shouldn't be entering around here at 3 o'clock. I should be waiting for it to head down to a discount area, which even here we see a fair value gap right here, right? So we see these here and here, and it doesn't really get much lower than this fair value gap, right? Almost exactly right there. It does mohawk like wick a little bit outside of that, but it really doesn't get much further than that. So I unfortunately, I averaged in after getting stopped out a couple times and then continued to average in as I saw price was heading towards the top of that volume imbalance. Ended up netting about 30 handles there as well. This was a trickier one. We're at the top of a range. You never want to be thinking long at a premium, but it was also holding this daily level as well. So for that reason, I took the long there and exited quickly in profit. And then I think that is about it. There was another play, I believe it was on this account. Let me see if it's here. This was one of the cleaner ones. So what you're looking for here, this is called a market maker buy model. Consolidation, distribution, consolidation, distribution, consolidation, distribution north, consolidation, distribution, consolidation, distribution, consolidation, distribution, consolidation, terminus. Terminus is this item here. So we took one contract after we saw after we saw that price is leaving this consolidation range with some really good speed, we were looking to take this as a fair value gap entry. We took it a little bit late there and had to withstand maybe 1 or 2 or 3 points of heat before we saw price was heading back up into some of these key levels here, and we took our profits right when it hits that level. So price, as we know, would continue to move onwards and upwards into the volume imbalance over the course of time. So those are 3 trades that happened today that I would study, or I will be studying, and you can study if you like. But back to the draw. So what are we going to do? So we ended up starting the week here, Monday, right? So Tuesday, we could either continue upwards and getting a nice body close within this area, especially considering that there is this level of sell side imbalance remaining. That is also kind of key because we know there is a fair value gap somewhere in this line of space, right? So what does that mean? It's in a premium as well compared to being down here, from this low to that high. This would be like less than 50% if we were trying to take it from the low to the high. So yeah, we are definitely still looking up into this area. We do have this daily wick kind of marked just in case it blows up through this mitigation block and up into the bearish order block. So those are things that I know that's a lot of terminology. I promise you, if you start making your way through Inner Circle Traders content, it will make sense. If there's any questions, just let me know. Drop it in the chat. No big deal. Happy to answer as well. So on the daily, we have started moving downwards into a previous 5-minute fair value gap, and that's exactly where it's at right this moment. It will be interesting to see if this week's profile is a high on Monday and then fall the rest of Tuesday, Wednesday, Thursday this week. Dollar doesn't really, the DXY doesn't really merit it, but then again, it's been a few minutes since I've looked at that. So maybe dollar is headed upwards, but I just can't see the catalyst to do so. So what else happened today? Let's head down to a 4-hour chart. And we do see that 4-hour gap is still there. Okay, good. And it looks like they created a higher low and a higher high. So maybe we would expect one more drive into that 4-hour sell side and balance buy side inefficiency, as it is also lined with a rejection block on the higher time frame. So we can kind of target that. If it doesn't go on Tuesday, if it doesn't get up there, or it gets up there and barely like misses it, that's signatures saying, hey, we're about to head lower real quick. So yeah, I mean, on the 4-hour and on the daily, we still are aware of where we're at. I could still certainly see us trying to head down into this area again, but we'll leave that up to some other people. We see this weekly fair value gap as well. So there's a weekly BSC high, weekly BSC low, and that's about it there. Let's take a look at the hourly. whole point is to be able to take a look at these and get a sense of where price could go to. So right now you see in Asia we've dropped maybe 10, 20, 30, 40, about 40 points so far. And in Asia that seems like a lot, you know. I don't know how much I don't know how much merit that has because we haven't created a lower low yet. If we take a look at this low, we see a high, low, higher low, higher high, higher low, higher high, and then maybe a higher low here, but we don't know yet. It's either Monday's high of week or maybe we create one Tuesday, latest Wednesday. So I guess it depends. So let's take a look at the hourly though and get a sense of what has hit, what did not hit. This is today's price action. We see that we ended up respecting this new week opening gap, and specifically this gap between that, you know, between those new week opening gaps. So we gapped up. We didn't get a chance to go any lower into that gap, which kind of stinks, but it's good for the bulls, at least for today. We were able to use that as a jumping off point and to serve as another option or way to be able to head up to that 1 day premium volume imbalance. And remember, those volume imbalances need price to trade through them one way and through them another way for them to become the balanced price range. When they do that, it becomes a lot more difficult. It becomes much more difficult to blow through it, basically blow through that setup. So let's see what we got here. So that was on the 60-minute. Let's head down to a 15-minute. Nose is dry. Okay, so on the 15-minute today, we saw that we had taken buy side liquidity. We saw that sell side liquidity got taken. We see some initial fair value gaps getting sold off, fair value gaps being sold off. And aside from that, we only see this rejection block. Price having gone up to that rejection block is missing. So that's about it. And of course, we are now smack dab in this buy side imbalance, sell side inefficiency. So, I mean, we will see what happens, but right now we're in the middle, and you want to get price out of the middle, whether it's going down towards these. You want to get out of that middle part of the range and get into closer to a edge or a imbalance that's in a premium if you're going to go short. Vice versa, if you're an imbalance not in a premium, go for the ones that are, you know, a little less expensive. Okay, so it's almost 9:49, so I wanted to keep this one short. I want to study a little bit, but tomorrow morning we're going to see what happens, what happened to price action, what's going to happen on a Tuesday of non-farm employment payment. Let's see. Okay, I can't figure that out. So, yeah, I think that's it for today. Pretty quiet Monday. Some good range moves, but as you can kind of tell, it's not exactly out of its zone yet. This bigger zone kind of looks like that. So they never got me out of that one, but let's see. We need to see a break above those relative equal highs in order for us to think that we can go long. What else we have? That's it. So I hope for tomorrow, I'm hoping that we reach up into that 4-hour SIBI and then come crashing down to take out some of the sell side liquidities during either FOMC or either during one of our not FOMC, but some other time. As long as it gets out of this consolidation, that's what we're looking for. That's the kind of key that we're looking for in order to identify movements that can continue forward and move. We want to see things stop dead in its tracks right immediately following, and then we can go email capture as well as needed, or go do whatever you need to from a company perspective and a trading perspective. I think once you get out of that box, you'll have a lot more opportunities. So, oh my goodness, I'm so tired. I need to get some sleep. Ugh. Spouting nonsense right now. Sorry about that. So, there's a couple of things that, like, you know, from today's performance was outlandishly good, but absolutely unnecessary on those initial accounts. You can build them up $500 at a time, $250 at a time. I mean, that's what I'm doing for my small accounts, right? So my small accounts, those have, you know, maybe $600 each in them, $200 each here and there. If you get a 1 to 3 R ratio, then you get, for every $20 you risk, you get 60 basically, and just rinse and repeat. So there's definitely some accounts that are in better shape than others. If you recall, right now I have 3 accounts that are in heavy drawdown, and I'm making them back right now and proving that it is possible to make them back. Even if you get down to your last $100, I was down to my last $55, and one micro contract can run against you for 25. So if I can do this, then pretty much anybody can do this. So that's going to be a different lesson, though, is mitigating drawdown. ICT has a lesson on that already, but I love the concept so much, and it's helped me retain all of my accounts for far longer. So once you start passing evaluations, or once you finish demo and start to venture into those evaluation accounts, and then once you pass those evaluations and enter into PA performance accounts, all the little things, like, you know, they help. All the training that you did, all the little benefits, you know, if there's food made available to you somewhere at work, then, you know, like, any little bit counts for you to be able to stay here and stay concentrated trading. And geez, I think today's haul was around $750 combined, spread across a few accounts. But yeah, once you get good enough, you can just go grab another one of those and pass it in a day like I did. If you missed it, it's somewhere in today's after 9:30 a.m. Open. It's somewhere there. So feel free to watch that one. And I think with that, I have to cut this one short today because I need to get some rest. I'm becoming more and more often delirious when I'm running these things, and it doesn't help that we're the only time is when we can get on late. So yeah, I think that's it for today. Good luck tomorrow morning. Be wary of our economic events at 8:30 or 8:30 a.m. employment cost index and 10 o'clock a.m. CB consumer confidence. Okay. All right. Well, I think that's it for today. We will close up and see what happens, what transpires in the morning, and then we'll get our levels and see where we can go from there. So have a great rest of the evening, and I'll talk with you soon. See ya.